Hi everyone, welcome to the accumulation data analysis for 9th of May. It was quite a bad day. All the indices were down. The broader market was close to almost 3%, especially the small cap index. A lot of pain in the market. There is no exact reason as to why this is happening. There is a lot of panic that is creeped in. The volatility index has also moved up, but there is no solid reason. So on one hand, you have the elections that are going on, wherein the voter turnout is kind of low. That is also spooking the investors probably. And also on the other hand, you have RBI kind of trying to curb the or let's say have a lot of restrictions on these lenders, which people are thinking that that will eventually lead to a liquidity issue and also slow progress or growth, and it will hurt their profitability as well. So let's see what the data says. Well, let's start with the India VIX. So India VIX again climbed almost 6.5% today, close to 18.2, right? So like we had seen in the previous videos, that since it has crossed that inverse head and shoulders, it's a clean up move till 24 odd levels, right? So once it hits 24 odd levels, probably a bottoming out might happen, but until then we can expect a lot of volatility in the market, especially the bears are kind of getting control over the market as of now. Now coming to the FIs, these have been continuously selling, right? So the FIs are continuously withdrawing money, although even yesterday when the FIs sold 6,600 crores worth of it, but the uh, DIS kind of bought 5,500 crores worth of shares, right? So they were trying to kind of hold it at those levels. Today's data is not out yet. Probably a similar number, or probably the DI number was on a lower side. That is why we are seeing such a big drop in the Nifty, right? So let's look at the analysis, that is the large cap accumulation. It has gone down a little today, probably because the DIs did not push in as much money as they did yesterday. Yesterday they put in almost 5,500 crores, wherein we saw a spike in the accumulation also, but today looks like it is more on the lower side. That is the reason even the Nifty kind of broke down, and also in the data it is showing us that they have not really bought much today, right? So if you look at intraday what Nifty did, it just opened a little gap down. It kind of closed that gap in the first candle itself, and then it was just continuous down, 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 right? Consolidated again, a breakdown, again consolidated, again a breakdown, right? So not really such a great sign since it closed almost at the day's bottom. So let's see how the things play out tomorrow. But tomorrow being a Friday, like I've told you, the big guys, or let's say the most of the traders, don't like to carry positions over a weekend. They usually like to have fresh positions on a Monday or a Tuesday, right? So that is also a kind tad bit negative, because we may not see that kind of buying coming in on a Friday, that is tomorrow. Now looking at what the Nifty did, the Nifty has actually broken down, right? It has broken the parallel channel support, and also one more line I had drawn, right? Trend line, diagonal trend line, even that it has broken. So now that it has broken, the immediate support for Nifty comes in around 21,809, wherein last time also it kind of took some support. I've taken the closing of the candles, right? And again another, if that is also taken out, probably 21,598, that is where we had bounced. That is the lowest point where it had closed, and from there it had bounced. If that is also broken, then 21,215 is where we have the third support for the Nifty. Chances are it should find some support, but even looking at it from this thing, it looks like it has made a M kind of a shape in the recent thing, probably a double top also. If this neckline is kind of broken, let's say around that 21,800 mark, then definitely there is going to be more pain. The market might even go much lower before kind of forming a bottom. Now coming to the best performing sector, so it was the auto sector, wherein you saw all the most of the stocks, Maruti, Tata Motors, all of them kind of moving higher. And if you look at what it exactly did, was it kind of touched the parallel channel upper resistance and kind of closed a little lower because of so much I mean, the bears were in total control over the market, right? So even the auto index kind of gave up the gains, but still managed to close with 0.5% gains for the day. Now coming to the Bank Nifty, I've been telling you and quite bearish also on that, since it kind of made that shooting star at the top and was continuously facing resistance at the upper channel. So it has been continuously moving down. So now the support lies around 47,000, that is a percent away, right? If that is also broken, probably near the parallel channel support, it can hold, or else it might go to 46,000 to 89, right? So those are the three supports it has. So probably tomorrow it should find some support. In case even the Dow kind of does okay and the FIs kind of I mean don't sell too much. So in the large caps, it is usually what the FIs do, and since the FIs have been continuously selling, and even in the futures market they are kind of short, right? So that is also adding a lot of pressure on the DIs to kind of hold this market. Now coming to the mid cap analysis, so the mid cap accumulation has improved a bit. So if you compare the last 4 days, that is last Friday and today, and this week's Monday, Tuesday, and Wednesday, this data is, I mean, the best. But if you look at the average for the last 1.5 month, it is still on the lower side, right? So I would not read much into this, because on a day when the index is down 2% right, you would want the data to be really strong so that you know that the bulls are gaining control. But even from the data, very small spike, I would not be really gung-ho on the index and say that it is going to reverse tomorrow, right? It may reverse, but then it all depends on how the accumulation is going to be tomorrow, and at what levels it kind of reverses. The price action will tell us if it is reversing, right? So if you look at the index, it has actually broken down of that 49,320 support. It has I mean closed lower 200 points. Maybe a small up move to kind of retest the breakdown might happen, but in case if that does not hold, or we do not close higher than that, chances are we go even lower from these levels on the mid cap index. Now coming to the small cap analysis, so the small cap data, even that shows a very small improvement. But if you look at the average that the small cap accumulation was over the last 1.5 month, it is still on the lower side, right? So looking at this kind of accumulation, when the I mean the index was almost down close to 3% odd, I would really not be going ahead and taking any trades tomorrow, right? No matter how good they look, right? I would still wait for tomorrow's data, see how the price action is, how the data is, and then probably on a Monday, if everything looks good, I'll go ahead and take a call, or else it makes sense to wait even further until the data improves. So very small spike in the data, both in the mid and the small cap segment, and even the chart here, there's a complete breakdown, right? So the next support is somewhere like 2% away from the current levels, around 15,600 levels. So probably somewhere around that area it might find some support, right? So as of now, the view is all of them have kind of broken the support, and even the data is not that great. Although there is a very small improvement, it all depends on the FIs. If they kind of stop selling, or let's say sell less, chances are the DIs kind of start focusing on the broader market and push these higher. Until that happens, I don't see a great recovery happening in all these three indices. The market will remain under pressure until even the VIX also kind of cools off. So let's see tomorrow. It's better to not trade anything, right? If you have your stop losses, kind of keep them intact. If that gets triggered, better to get out of the market and again re-enter once the sentiment, or let's say the data becomes better, right? Hopefully this helps. See you in tomorrow's video after the day's closing. Thank you.